Naresh Jalan is joining us this morning, MD Ramkrishna Forgings. Thanks for joining us, Mr. Jalan. Lot to chat about this morning as we take a closer look, of course, at what's really the outlook, given the way the stock has also been buzzing and markets have seemed to be tracking closely developments there. So, with domestic tonnage on a downslide, let's start with that. Export demand has been unstable. How has your business been impacted by all kinds of headwinds that the industry has seen lately?
I think post the festive season, we are seeing stable demand in domestic market. Market has improved in tipper segments. Long haul still remains to be subdued, but tipper segments have started growing, and exports have been stable. It is growing as per our guidance, and North American exports, we have added a lot of new customers. So both taken together, that we feel that we are on track and things have improved since the last quarter.
Where is demand coming from?
And like I told you, in domestic market, in commercial vehicle sector, tipper segment has improved. And we see a robust demand in the tipper segment. And in exports, I think with the new customers coming in, we find that we have been able to still maintain our export growth.
What is your assessment of the current inventory levels of the CV of the entire CV space? Do you think this demand upturn could be largely because of base effect and inventory level challenges would be there, or you think that there is going to be a slow and a gradual uptick which will happen every month? I mean, can you see a month-on-month uptick for next 6-7 months, or it's too early to call that?
It is too early to call that, but what we see that the demand in tipper vehicles has been back. The inventories have really bottomed out in the tipper segment. After the rainy season, I think that in tipper segment we find that inventory levels are low and demand is back. But in long hauls, yes, still inventory is there in the system, and we find negligible demand in the long haul segment.
What are the steps that have been taken in order to offset the impact of the CV down cycle? To what extent has diversifying beyond CVs into new segments helped?
I think since our last call, as we had said, we have moved a lot of our capacities, almost close to 15% of our capacities, to railways, and we see railways demand booming much better. And we find there is a lot of traction in the railway segment, and our movement to railway segment has been will be seen from this quarter onwards. And gradually in next quarter, we should be doing a substantial business from Indian Railways.
Power also coming back. One is demand, which could be, okay, top line is back, but because markets are so depressed that your buyers and OEM players in this case are not giving you enough margins.
I think to rightly say, margins have to be basically productive driven. I don't think margins can be basically, with price increases, margins can be improved. So we are concentrating much on improvement in terms of our production cost rather than talking to customers in terms of price improvements.
So you're sounding an optimistic note, and we'll leave it at that. Thank you so much, Mr. Jalan, for joining in, telling us a bit more about your export business, how things are continuing back home, as well as what the outlook is on the CV exposure.